I'm Dr. Zach Allmand, co-founder of Apex Payment Solutions. Today, I want to talk to you about understanding merchant services. There are 4 different models that you can price merchant services as. Flat rate pricing is the simplest way to price merchant services. You'll pay the same flat percentage rate no matter how much volume you process. While it is the simplest option, typically there is a rate for card present transactions and then a higher rate for card not present transactions. The downside is you will always overpay, as these providers will pad their rate to make sure they always make a profit no matter what type of card is processed. The office does not get a discount for a less expensive card process, such as a debit card. These processors are also typically aggregators, which means they don't verify the individual accounts and tax ID numbers of the merchants. So this can sometimes lead to an increased risk of fraud in your dental practice. A lot of these companies market their pricing as low as 1.49%, which is true for the very basic low-cost debit cards. But rewards cards, business cards, and card not present transactions actually process at more expensive tiers. And there's a lot of hidden fees that aren't included in the rates that you are quoted. The third option is interchange plus pricing. This is the most transparent and straightforward way of pricing merchant services, though it does lead to more variation in your monthly rate. The variation is because every card and debit card has its own interchange rate based on the rewards level, the card provider, and whether the card is present or not. In an interchange plus pricing model, the merchant services provider, such as Apex, sets the rate that you pay them. You still pay the interchange rate, which is the true price of the card, and you pay that to the card companies. The rate that we charge is for the merchant services provider to ensure the transaction and to verify the funds for next day. For example, if your patient uses a low-cost debit card with an interchange rate of 0.8%, you would pay Apex that 0.8% plus an additional 0.2% for our services. If the customer uses an American Express rewards card that has an interchange rate of 2.8%, you would pay that 2.8% plus the 0.2% to Apex. This leads to different rates each month, since the card mix and types of cards that your patient use will vary on a month-to-month basis. For example, one month, a large transaction on an American Express Platinum card, for example, might result in a higher rate, while another month, with mostly debit card transactions, would result in a lower effective rate. Your effective rate with an interchange plus pricing model should be anywhere between 1.9 and 2.25%, accounting for all fees. To calculate your effective rate, you want to divide the total fees by your total volume. For instance, if you pay $500 in fees and process $25,000 that month, your effective rate is 2%, which is a very good rate. Cash discounting is when the patient pays a 3 to 4% convenience fee, regardless of the card type, covering all credit card fees and debit card fees, so the office doesn't absorb any of them. For surcharging, the patient pays the fees if they are using a credit card, but the office absorbs the fees if the patient pays with a debit card. This model gives your patients the choice of whether they pay the fees or not, and puts the power back into their hands while removing the cost of processing credit cards from your office. This surcharging model is advantageous because debit card fees are much lower than credit card fees, leading to an effective rate for all cards processed to the office of 0.6 to 0.8%. Common pitfalls of merchant services include bait and switch models that come with tiered pricing, where they lead with the best rate, and then non-qualified cards like business rewards cards or any card that is not present is where you'll pay a higher fee than actually quoted. Some merchant services processors will also add in additional fees. At the end of the day, the only thing that matters is your effective rate. You can calculate this by adding up all of your fees and dividing that total by the total volume you process that month. If your effective rate is higher than 2.3%, you should be taking a closer look. Always analyze your statements carefully, looking for hidden fees and pricing changes. Some merchant services providers may add additional fees that aren't disclosed in their marketing pitch, often burying them deep in the fine print of their contracts. It's crucial to review your monthly merchant services statements on a regular basis. Some companies will increase your rate without letting you know. you need to choose a company that guarantees the rate for the life of your processing. Keep an eye on your effective rate, and if you have any questions or concerns, don't hesitate to reach out to Apex for assistance.